Good morning and happy Martin Luther King Day for everybody watching live on BAM YouTube. Let me know in the comments what market you are tuning in from. The hot sheet covers what you need to know about the real estate industry in a 24-hour time period. We do this every Monday through Friday. This is week 2. On today's hot sheet, I will cover a record high number of realtors, the state of home building, Zillow's top markets in 2023. What are they? A Goldman Sachs update from last week, and why Home Depot is changing how it pays employees. Today is Monday, January 16th, 2023, and the hot sheet starts now. Every single Monday through Friday, we do this show, but a little update to that. That's when the markets are open. Okay. So we didn't mention that last week. That's why today the markets are closed, honoring Martin Luther King. And we're doing this show only because we did not say that last week. But going forward, just so you know, this show, the hot sheet, will be live every single Monday through Friday when the markets are open. We want to pack in this show with everything housing related as it relates to the economy and what you need to know in a 24-hour window as a real estate professional, an investor, an attorney, an appraiser, an agent, a broker. And it makes more sense when the market's open. So a little update there. Also an update on a lot of feedback from you wanting to download the slides that we use and the sources that we use in the show every single day. We're working out the logistics. We hope to have that soon, potentially as early as this week. All right, let's get right into first topic of the day. Realtors are on the rise. There is a record number of realtors right now in the National Association of Realtors. There was a lot of talk in 2022 that this number was dropping substantially. Okay. You might have seen reports out of Nevada, which had the largest drop in 2022, that agents were on the decline. That being said, for the fourth straight year, NAR, National Association of Realtors membership, edged ever closer to 1.6 million. Okay, they do expect a drop officially in this year, despite a decelerating housing market. NAR hit its highest membership count ever in 2022, close to 1.6 million, surpassing its previous record of 2021. As of December 31st, 22, NAR had 1.58 million members, up 1.3% from the same date a year ago, when a record 1.559 million members were in NAR. Okay, so surprising, because we keep hearing that there are agents getting out of the market in 2022. Remember, though, this is a net number. So while real estate really had a great year, 2019, even before the pandemic, 2020, 2021, there was a lot of people switching jobs at that time and getting into real estate class. And so some of these numbers are lagging along, where people finally in 2022 got the class done, got the test. Some people take a year and a half to get this done, believe it or not, even though on average it's anywhere from 40 to 70 to 80 hours, depending on the state, to get the license. It takes people a long time. They're doing it in between a part-time job and such. So the net number in 2021, or 2022 rather, was 21,434. The record 100,000 new members in 2021. That's a record in 1 year. 21,000 net new members in 2022 for NAR. There was still probably, over 100,000 agents that got out, but net number, NAR added 21,000. If we think back, when has NAR been even close to this size? We've got to go all the way back to the last real peak before the Great Recession. So this is typical in a housing market that has done very well. Okay, in the early 2000s, that led to the Great Recession, NAR membership mostly stayed within a range of 600 to 800,000 members, basically half of where we are today for realtor members. Doesn't mean licensed real estate professionals. You could be a licensed real estate professional, have your real estate license, your broker, your agent, salesperson license, and not be a member of NAR. This is just for members of NAR. Okay, so they broke the 1 million mark in April 2004. That's before that 2004 to 2006 run up. The count hit a peak of 1.37 million in October 2006, coming in at 1.36 million for 2006 overall. In October 2006, NAR came 13 months after the housing boom peaked, seasonally adjusted of 726 million annual sales. Okay, so very much a different ballgame than what we're going to see in 2023 for the total number of sales. That number beats anything that we saw in the last 3 years. Some locations that have high number of realtors: California has a high number of 213,000, 214,000. Let me know in the comments if you are an agent, where you are an agent. Do you have a high number in your MLS or a low number? Followed by Texas, 150,000, 1.94%. New York, 63,000. Jersey, 62,000. 60% of realtors live in 10 different states. Let me know in the comments if your market is similar. If you just walk to any coffee shop, walk outside, and you're bumping into a realtor. Okay, so record number, but NAR does expect that number to decline in 2023. Let's get into the state of the home building market. We referenced on last week's hot sheet that KB Homes, when they announced their earnings just last Wednesday, KB Homes had 68% cancellations, 68% in quarter four. So home builders are feeling the pain. A lot of home builders are saying that right now is a very difficult time for them. Let's go through the state of the market as written by Housing Wire. All right, so quality leads. 40% of builders cite right now that they struggle with understanding how to capture the right leads for their business. This is a critical piece in order to scale operations. If I'm a real estate agent or broker, that is an opportunity. 4 out of 10 builders are saying right now that they don't understand how to spread the widest net to capture the right buyer for their product. This is what agents and brokers in that market should be using to go to these builders and say, I can maximize the reach for your product. I can get you the type of buyer that you want into these model homes. A lot of them have in-house sales teams. If you can show them how to capture the right leads for their product, you might be able to pick up some listings when in a market right now where inventory is super volatile and certainly transactions are down. The other pain point for builders, 61.8, almost 62% of U.S. home builders relied on subcontractors to manage their business in 2022. Unfortunately, subcontractor delays continue to be the number one challenge for 37.1% of builders. This is if you've done any work right now on your home or an investment property, you know that finding great work is hard to come by. Some of the most talented contractors in housing right now are going to be out 2, 3, 4, 5 months. Certainly, if you're in South Florida, you know what I'm talking about. In your market, is this similar? Let me know in the comments if it's really difficult to find a great subcontractor, a reliable subcontractor who's skilled and who's going to be able to get the job done on time. All these different variables are impacting builders right now. Home building contract values. Given the various factors at play in the construction process, builders must remain steadfast, understanding fixed price versus open book or cost plus contracts and how to ensure they're pricing their jobs correctly for profit. Okay. If materials, and this is why a lot of builders in quarter 3 and quarter 4 of 2022 just stopped new projects. Okay. They had about 8 months overall of built up inventory, a lot of these national builders, and they just stopped on the new projects. You saw cancellations in quarter 4. They wanted to get through inventory because it's very hard to predict where prices might end up at the end of 2023. If their cost of materials really high, if their cost of labor, finding good subcontractors very high, you can see why builders wanted to hit the pause button on this. Additionally, 30% of builders that were spoken to cited that by using fixed price contracts, they were able to add over 25% for their projects. For the builders relying on cost plus contracts, 25.3% of them were signed with less than 13% gross profit, which is unlikely to cover the fixed expense for the business. So listen, people think builders just make tons and tons of money. If they get a gross profit of 25%, they're doing really good, right? And they want to make sure that they can get through a project and not lose money, and more than not hit that 25% of gross profit. So it's not all roses for builders. They're going through a challenging time, but we still need inventory. So we're in one of those hard spots in the building community right now. Zillow has just announced their 10 hottest markets in 2023. What are they? This year's top 10 are Charlotte, Cleveland, Pittsburgh, Dallas, Nashville, Jacksonville, Kansas City, Miami, Atlanta, and Philadelphia. We're going to get into a Goldman Sachs update from last week's hot sheet where we broke down Goldman Sachs predictions. We also did it on Knowledge Brokers podcast on Friday. If you're not checking out what's going on with Knowledge Brokers podcast every single Friday, you're missing out. Just search into YouTube at Knowledge Brokers podcast. We went really deep on what Goldman Sachs said about about these particular markets in 2023, 2024, and 2025. So Goldman Sachs, the only mega city that they had on their list of going up in value was Miami. Miami coming in 8th on Zillow's list for hottest markets of 2023. Why do I think Zillow's projection for hottest housing market is important? Because they have more traffic from home shoppers than anybody else. Their data is substantial. So I want to know, especially if I'm an investor, especially if I'm somebody that's looking to invest in different markets throughout the country, or if I have a client who's thinking about going into another market, where are the opportunities? Zillow can see this traffic before anybody else can. And they're saying that Charlotte, Cleveland, Pittsburgh, Dallas, Nashville, Jacksonville, Kansas City, Miami, Atlanta, and Philly are going to be the hottest markets of 2023. Their coolest markets this year: San Jose, Sacramento, Minneapolis, Denver, and San Francisco. Interestingly enough, Denver and San Francisco both on the list for Goldman Sachs as having double-digit home price decreases in 2023. So they are in alignment there. That article can be found on BAM, nowbam.com. I do have an update for you on this Goldman Sachs housing outlook for 2023 and 2024. Again, talked about it a lot in Knowledge Brokers podcast, talked a lot on the hot sheet just last week. You can go check out all of those under the live tab here on BAM YouTube. And if you're enjoying the show, please hit the thumbs up and please consider subscribing to this channel. We do this show every single Monday through Friday. So this chart from Lance Lambert over at Fortune, he just tweeted it out over the weekend, is an update from some of the information that we went through on Goldman Sachs last week, how regional home prices are expected to shift in 2023 and 2024, again, according to Goldman Sachs. So you can see there that Austin, San Francisco, San Diego, Phoenix, and Denver are projected to be the biggest losers for Goldman Sachs in 2023. Austin, 15.6% home price decline. San Francisco, negative 13.7%. San Diego, negative 13.4%. Phoenix, negative 12.9%. Denver, negative 11%. If you're in any of these markets, let me know in the comments below. You can see that Tampa, Las Vegas, Portland. Now they're projecting. Now what's interesting here is they're saying Dallas is going to have almost a double-digit loss, about almost 10% decrease in home value. Zillow saying one of their top 10 hottest housing markets. So Zillow saying, hey, there's real interest in Dallas. Goldman Sachs is saying that they're going to see near 10% home price decline. So maybe the interest isn't going to correlate to an increase in values, is what Goldman Sachs is saying. Just interesting delineation there. What's added to this chart from last week's update on Goldman Sachs on how they're looking at housing market is this 2024 forecast. Okay, so you can see that while they're looking at Boston having a substantial decline in 2023, for example, they're expecting in 2024 for that market to go right back up. Same thing with Las Vegas. Las Vegas, an over 10% decline in 2023 is projected by Goldman Sachs, but 2024, they think they're going to go up. Okay, Charlotte, which was number one on Zillow, they're calling for, I don't know what, that's basically a 6% decline for Charlotte, but Charlotte going back up in 2024. Houston, Washington, D.C., Los Angeles, all expected to decline per Goldman Sachs in 23, but go up in 2024. And then these markets right here, not expected to go down that much in 2023, but substantial increases in 2024. That would be Chicago, St. Louis, New York, Philadelphia, Baltimore, and Miami, which is projected by Goldman Sachs to not only go up in 2024, but 2023 as well. Miami was on the list for Zillow as one of their top 10 hottest housing markets. Goldman Sachs right now, they believe that 40% of these home value decreases have already happened. They've already occurred. Goldman Sachs believe home prices are down nationally 4% right now as we sit here today on this Martin Luther King Monday. Goldman Sachs has a 10% decline peak to trough. So we still have 60% of the way to go on Goldman Sachs. Again, if you want more breakdown of the Goldman Sachs housing outlook, they are one of the most bearish outlooks out there. You can go search at Knowledge Brokers Podcast on YouTube and get our full breakdown from Friday on that. Okay, Home Depot. Interesting. Home Depot. I don't know if you're a real estate investor, if you're doing fix and flips, if you're an agent working on behalf of a client, have you ever gone into Home Depot? Let me know in the comments. Have you ever gone into Home Depot and you're just going down aisle after aisle looking for somebody to help you? Has that ever happened to you? Have you ever found somebody that works at Home Depot that can help you? And they say, you know what, just a minute, I got to get the right person for you. And then you're waiting, and you never see that person. Well, maybe Home Depot corporate is going to help solve your problem. Today, on January 16th, Home Depot is changing how it will pay its hourly employees. They will now be going to pay employees up to the minute. Okay, so instead of hourly, hey, you work 9 to 5 and you start at 9, you end at 5. If you start work at 8:47 and maybe you end at 5:15, you're going to get paid for every single minute leading up to your start shift and after your start shift. So, or if you leave early, you're going to be paid by the minute. Could this not have an impact on people changing shifts or maybe even changing breaks at Home Depot and how they help serve customers coming through the store? One could only hope that this will be a benefit, but Home Depot, which stock has been incredibly strong throughout the last year, they are in the last 12 months, they are down just under 10%, but they had such a huge increase during COVID. Last 3-4 years, Home Depot stock has been a great performer. They are now changing how they're going to compensate their employees, paying them up to the minute. Makes a lot of sense. If you want somebody to really care about the company, give them that flexibility, put them on a salary so that they're actually invested in. They have that little bit of flexibility into their schedule. Okay, today being a holiday, the markets are closed, but let's just take a quick look at where the 10-year finished off the week at last week. 10-year was up slightly on Friday, 0.051, but ending under 3.5%, 3.498%. You can see the last 5-day outlook here was certainly on a decline for the 10-year, which is good news for 30-year fixed mortgages, which ended the week, according to Mortgage News Daily, at 6.09% on the 30-year fixed. Of course, the prior year was 3.57, so you can see the year-over-year difference there. Throughout the week, we bounced between 6.21 at the high and 6.07 at the low for Mortgage News Daily on the 30-year fixed. Today at 11 a.m. Eastern Time, Overask podcast with Tom Story will be going live. He's going to be talking about personalized videos and how to use Twitter as a real estate professional. So if you're looking to up your content game this week, this month, this year, make sure you do not miss that Overask podcast going up live at 11. Subscribe to this channel so you don't miss anything, including another hot sheet where we go live every single day at 9:30 a.m. We'll see you here tomorrow. Share this video with someone who can benefit Looking forward to seeing you back here live tomorrow at 9:30.